Welcome back. My name is Chris Gosselin from Australian Fund Monitors. Today we're talking to Richard Grace from Digital Asset Funds Management. Richard, welcome.
Thanks, Chris.
So just give me a bit of background about DAFM, or Digital Asset Funds Management.
The firm itself was established in 2012. Algo trading firm that was originally trading equity futures and options. So in 2021, Digital Asset Funds Management was established, and the same team, the same algo trading team, the same software engineers and developers were working side by side with the equity futures and options and the crypto futures. And for nearly 4 years now, we've had Digital Asset Funds Management operating, and we're just 2 months shy of a 4-year track record.
And you're managing two strategies which are quite different, really.
The second fund, the more interesting and flagship fund, is our Digital Income Fund, and that's a market neutral fund. So we don't care whether Bitcoin goes up or down, Ethereum goes up or down. Every single transaction is fully hedged, and we try and make money from the volatility. So it's actually, volatility is what we thrive on. So the more volatile Bitcoin is, the more money the fund typically makes.
So this is an arbitrage fund. You're buying and selling almost at the same time on different exchanges across the globe.
Yeah, the Digital Income Fund runs two strategies. One is a cash and carry strategy, and that accounts for about 20% of the trading book, whereas we will go out on the futures curve. So let me take a step back for a second. It's essentially a managed futures fund. We hold Bitcoin as a collateral asset, and we go short a future contract equivalent, and that's how the fund is completely hedged. So 20% of the trading book is cash and carry. So when the opportunities arise, when volatility picks up, we go further out on the futures curve, and we will be selling Bitcoin at a higher rate, for example, on the futures. We roll that right down to delivery if necessary, so we've locked in the returns. Quite often we'll exit the trade when more profitable opportunities come up, but the other 80% of the trading book is high frequency trading and arbitrage opportunities, and that's not just along the futures curve, it's along the futures curve across different futures exchanges. So we typically trade about 5 or 6 up to 7 different crypto futures, and the different curves, the further out you go, are all shaped in different ways and manners. And so there's arbitrage opportunities across that. And so the algorithmic part of the algorithmic fund picks up those different opportunities and profits from that.
You're offering quarterly distributions, is that correct?
That's right.
And have you always been able to maintain those quarterly distributions?
Yeah, we have. Out of the 46 months the fund has been in operation, we've only ever had one negative monthly return.
In 46 months, when crypto's been going up and down all over the place, you've only had one negative month.
That's correct. Bitcoin itself, when the fund was launched, fell for pretty much 2.5 years. So during that entire time, the fund was making money, except for that 1 month that I mentioned. And that was the month FTX blew up and they carted Sam Bankman-Fried off to jail.
Okay.
So the fund lost around 4.3% during that particular month, but we're up over 129.5% over the duration.
What's that annualised?
Annualised, it's 24.8%.
So the fact that you're trading crypto in a way is almost irrelevant. You could be trading anything. You just happen to use crypto because it's incredibly volatile, and that suits what you're doing.
That's
right. So that volatility, you seem to be able to tame that and smooth out the volatility to get a return of over 20%.
Yeah, I would describe it more as we profit from the volatility. So in a sense, the more volatile, the better. We're not trying to constrain that volatility. Our algorithm works on the volatility. So just a little bit more of that technical aspects regarding the algorithm. We've got 15 software engineers, developers and quants working on that algorithm. We're in our more than 400th upgrade of that algorithm. So we've got constant operational excellence and improvements going on. It's also overseen by 10 plus traders who sit around the globe. So we have the head office in Sydney, we have staff in Bordeaux, in Edinburgh, in Sao Paulo, and in Wellington. Crypto, as you know, trades 24/7. So these guys are working round the clock, doing different shifts to make sure that they can profit, that the algorithm works to profit from these opportunities.
And they're just overseeing that.
They're overseeing that.
Computers are making the decisions.
That's correct. Yeah.
Okay.
Yeah.
Where's the risk? I mean, we're saying that from a performance basis, the only risk seems to be the exchanges, the Sam Bankman-Frieds of this world. Hopefully they're in jail and there aren't any more to follow them. But is that the risk, the counterparty risk?
Yeah, that's it, exactly, the counterparty risk. So if you think about it, we are trading with, let's say, half a dozen exchanges. We try and minimise that counterparty risk by doing extensive due diligence on each of those exchanges. We've also been fortunate that the recent government regulations have tightened up. There's a new movement going through called off-exchange settlement. So essentially what that is when we trade with an exchange, we're required to put some Bitcoin with that exchange as collateral. Now that, in a sense, is at risk. If something goes wrong with the exchange, like we saw with FTX and Sam Bankman-Fried. The new off-exchange settlement is moving through the market where we don't put all the Bitcoin and collateral onto the exchange. It's held in custody with a custodian. And at the end of the trading day, the custodian applies to the exchange what's required in order to match out the trades. If there's any dispute, there's a third umpire that comes in and sorts out those discrepancies. But by and large, this is a much safer method going through the market at the moment, and it helps reduce that counterparty risk. But look, let me add, with all investments, there are risks, and this is the one that's clearly identifiable. But if we look back at the Sam Bankman-Fried incident, the investors in the digital income fund who were investing in the fund at that time were segregated. They're getting almost all their money back because of the court case that went through when the assets were frozen in the case of Sam Bankman-Fried and FTX. And any investor in the fund since that November 2022 date is not at all affected by what happened in that isolated incident.
Richard, it sounds, on the one hand, incredibly complicated because it is, but on the other hand, the outcome is quite simple. This isn't open to retail investors, it's only open to wholesale investors?
That's correct, wholesale only.
Okay, so minimum investment amount?
Is 100,000 Australian dollars. There's taxation statements provided at the end of the financial year. Investors can either collect the quarterly distributions or they can choose to reinvest the returns. So it's just like any other unlisted unit trust fund from that perspective.
Okay, except that it's investing in crypto. A lot of people shy away from crypto because of the reputation, but in fact this is something where you need to balance the reputation with the fact and the performance over time. Yeah,
that's right. In some ways, it's a good introduction to crypto because you're getting hold of the asset space, but you're eliminating the roller coaster ride, which can, if you're in a long only position on Bitcoin, for instance, it can take you down double digits in a very quick period of time. Sure. and so forth. Whereas this tends to just sort of climb the stairs, keep marching higher. And in a sense, what you're paying for in this fund, or what you're getting in this fund, is the excellence of the algorithm and everything that goes around that, the human capital that's built that, the human capital that oversees that. And that's very, very difficult to replicate. I mean, we're talking of some very experienced guys monitoring the operation of the algorithm, taking out some of the emotion or all the emotion because it's an algorithmic traded fund. And that in itself is part of the asset and the experience we're offering in this
Richard,
fund.
Thank you very much for your time. It's been terrific to speak to you. We'll look forward to seeing the fund perform over the longer period.
Yep. Thanks, Chris.
That's it. Richard Grace from Digital Asset Funds Management.